Income Tax Return 2025. In this video, I'm going to explain the 5 key points you should review before submitting your 2025 income tax return. I'll explain everything clearly using simple language and realistic examples that will guide us throughout the whole video. And stay until the end, because in the last section I'll also show you two very powerful tax incentives that can help reduce your tax bill, especially if you run a business and above all if you operate in the Canary Islands. So let's go step by step and look at what you should review before filing your tax return with a professional approach. With that said, let's start with point number 1: personal details and autonomous community. The first thing you should review before talking about incomes, expenses, or deductions is your personal information. This includes your date of birth, your marital status, whether you have children, whether you have dependent parents or other ascendants, or whether you are filing individually or jointly. And finally, the autonomous community where you are considered a tax resident. This is important because it is not the same to live in Madrid, Andalusia, Valencia, or the Canary Islands. Each region has its own regional tax deduction, and this can create or limit opportunity to save tax. When this part is clear, we move to the next question. Where does your income come from? And that brings us to point number 2: income from employment or economic activities. The second point is to correctly identify your main source of income. In most cases, we usually find three common profiles: an employee, a company director or administrator, or a self-employed person. If you are an employee, your main income is usually declared as employment income. In that case, there are certain items you should review, such as social security contributions, union fees, and in some situations, legal expenses related to an employment dispute with your company. If you are a company director or administrator, it is also important to review how that income is classified for tax purposes and whether some related expenses may be relevant, such as social security contribution where applicable. If you are self-employed, then we move into a much broader and more technical area. Here it's not just about how much you invoice, it's also about how you calculate your net income and whether you are really using all the deductible expenses connected to your activity. When I talk about business-related expenses, I mean things like buying goods or materials, advertising, office rent, self-employed social security contributions, mobile phone, internet, software, office supplies, a computer, travel, some business trips, and even certain business meals, as long as they are properly supported and directly related to the activity. And here is a key idea worth repeating: not every expense is deductible. Only those that are truly connected to generating income and properly documented can be deducted. That is the difference between good tax planning and a weak deduction that may not hold up under review. In our example, let's imagine someone who is self-employed but also has a job with a marketing company. But we must remember that in an income tax return, you do not declare only employment income, you declare the totality of your income. And that connects us to point number 3: income from real estate. At this stage, we review whether the taxpayer owns real estate and if so, how each property is being used. Because owning your main home is not the same as owning a second home, a long-term rental property, a seasonal rental, or a holiday rental. If you own a property that is rented out and generates income, this is the section where you declare it. But you do not only declare the rental income, you also need to review the deductible expenses related to that property, such as community fees, property tax, insurance, interest, repairs, certain utilities where applicable, also depreciation of part of the property value. This last point is especially important because many people know how much rent they receive, but they do not calculate the deductible expenses correctly. As a result, they often pay more tax than necessary. Now, here comes a very important point. Renting out the residential property is not taxed in the same way as a seasonal or holiday rental. In some residential rental cases, the positive net income may benefit from a significant reduction. In our example, let's say we have two rented property. One is a long-term rental and the other is a holiday rental. Before we continue, if you find this information useful and you need help with your 2025 income tax return, or if you want more information or personalized advice, you can contact us. We are Fiscal Tax Canarie and we are located on Calle Triana in Las Palmas de Gran Canaria. You can contact us by email, by WhatsApp, or directly through our client portal. You register, send us your documents, we review them, and our team will prepare a quote for your tax return. And now let's continue with point number 4. Capital gains, cryptocurrency, interest, dividends, and investments. In this section, we review transactions such as the sale of real estate, the sale of shares, investment funds, cryptocurrencies, bank interest, dividends, and in general, savings, incomes, and capital gains. This category is different from the previous one because it has its own specific tax treatment. It is not simply mixed together with salary income or business income. It follows different rules and different tax rates. This is very important because the same transaction can have a very different tax effect depending on the time of income involved. In practice, if you have sold shares, trade crypto, received dividends, or sold a property, you need to carefully reconstruct the transaction, calculate whether there was a gain or a loss, and check how it must be included in the tax return. And here is another important point. It is not only about gains. There are also capital losses, and if they are handled properly, these losses can be offset against other incomes and reduce your overall tax bill. This is especially useful for taxpayers who invest regularly. In our example, let's imagine that the taxpayer has sold a property, received some dividends, and sold some cryptocurrency. Once we have reviewed personal data, the source of income, real estate, and investment, we arrive at point number 5. Tax calculation and tax optimization through deductions. We have now reached the 5th point. Once all income has been correctly classified and entered, the next step is to calculate the tax, analyze which deduction or incentive might apply. In our example, this gives us a final result. That result is usually divided into a state tax portion and a regional tax portion, each one with its own weight and effects. Once the tax has been calculated, we then review the different deduction options. State deductions, for example, energy efficiency works, purchase of electric vehicles, renewable energy improvements, and other similar incentives. Regional deductions, for example, in the Canary Islands, rent, study expenses, medical expenses, and other regional deductions. Other deductions depending on the autonomous community. For example, in Valencia, certain personal expenses, or in Madrid, investment in startups. International double taxation deductions. If you have paid tax in another country, Spanish tax rules may allow you to deduct the tax already paid abroad to avoid double taxation on the same income. For example, if you earn rental income in another country and already pay tax there, the deduction for international double taxation may apply. Its purpose is to avoid the same income from being taxed twice just because it is connected to two different jurisdictions. Now, as I promised at the beginning of the video, let's finish with two very powerful tax incentives that we sometimes apply for our clients when the circumstances allow it. A very important note: these incentives are generally relevant for self-employed individuals or business owners. If you are only an employee, they usually do not apply. And if you are a company director, some of these issues may belong more properly to corporate tax, which we can cover in another video. So let's begin with the first one. Investment linked to the cultural and audiovisual sector. The first incentive relates to certain investment connected to the cultural, audiovisual, film production, or live entertainment sectors. These are very attractive incentives, mainly because in some cases they can generate a very significant tax benefit. In our example, let's imagine we make an investment of 5,000 euros in a cultural project that meets all the legal requirements. If the structure is correct and all conditions are met, that investment can generate a very interesting deduction. Of course, this is an area that requires proper analysis because everything depends on the type of project, the legal requirements, the structure of the investment, and the support documentation. We continue with the powerful incentive number 2, Canary Island Investment Reserve, the RIC. And since we are talking about the Canary Island, we cannot leave out the RIC, the Canary Island Investment Reserve. This is one of the best known tax incentives within the Canary Island tax regime. The basic idea is simple. If you generate profit from an economic activity and meet the legal requirements, you may allocate part of that profit to a reserve and obtain a very significant tax reduction, with the commitment to invest that reserve later in an eligible asset or project. In our example, let's imagine that we have obtained 40,000 euros of income from economic activities. In that case, it may be possible to allocate part of that amount to the RIC with the commitment to reinvest it. And where can that investment be made? Depending on the case, it may be materialized in asset linked to the business, equipment, related real estate, business expansion, participation in certain business structure, or other assets specifically allowed by the regulations. So, in summary, before filing your 2025 income tax return, there are 5 main areas you should review carefully. First, your personal details and your autonomous community. Second, the nature of your income, whether it comes from employment, company management, or economic activity. Third, your real estate and rental income. Fourth, your investment, cryptocurrencies, interest, dividends, or sales. And fifth, the final tax calculation together with all applicable deduction and incentive. Also remember that the 2025 tax campaign begins on 8th of April and ends on 30 June 2026. So it is a good idea to prepare your documents in advance and not leave everything until the last minute. If you need help with your tax return, with reviewing a draft return, with foreign incomes, rental, cryptocurrencies, or tax planning for freelancers and business owners, you can contact us. We are Fiscal Tax Canarie, based on Calle Triana in Las Palmas de Gran Canaria, and we will be happy to help you. You can send us an email, write to us on WhatsApp, or access our Clean portal directly, register, and upload your documents. Our team will review everything and send you a quote for your tax return. And if you made it this far, thanks you very much for your attention. I hope this video has been useful. We have left out some topics that deserve their own separate videos, such as the Becan Law and international tax planning. So, subscribe to the channel, leave your question in the comments, like the video, and do not miss the next one.